Yo, what's up guys? It's your boy Narcos and I'm back on my YouTube channel with another video. So in this video I'm gonna be doing my market focus. I'm gonna be sharing the pairs that I'm looking to trade in this week, the pairs that I think they have potential to make us money this week. So if you're new to this channel, please like and subscribe and stay with me, stay until the end of this video. So I'm looking to make this video as short as possible. I don't want to make it a long video, so I just want to make it short as possible. So if you're new, please like and subscribe and stick with me until the end. So in here I have pound CAD. So starting from a daily time frame down to H1. So this is my daily chart. It looks like this. So this is my daily chart. Firstly, I'm going to identify my low. This is my low. Damn son, where'd you find this? This being my trend line. It's not quite clear on the H1. So I'm going to delete this one. Move to H4. Yes, now it's clear. Just want to refine my bottom trend line, which is my supporting trend line in this case, and then my top trend line in here. It lines up very perfectly to these 2 points. So I have a rising wedge. This is a rising wedge on pound CAD. We had the first touch, second touch, third touch, but I'll count these touches as one, as a single touch. This is just one touch. So this is what we have. We have 1, 2. We're looking for a third touch there. 1, 2. We're looking for market to want the market to from here to shoot to these areas and then shoot down to give us another touch in this area. So that's basically it. I found my direction, so I'm gonna dive into H1 chart. Okay, on the 4-hour chart, you can see what the market already broke this support, this resistance. Market is broken above this support, this resistance. The market has broken above this resistance, came and test, shot down, double bottom, test again, shot down. It failed several times, failed here, until it broke last week. So what you're gonna be looking for, you will see the price will come and test, and then shoot up. So we're gonna take the buys here up to the top of the structure with our stops below the zone. But I'm gonna refine it on H1 so that you get a clear picture of what's happening. Okay, we said the price has already broken our price has broken our resistance, tested it here and tested here, and then kept trickling here, gave us a continuation. It was a pull flag, here to continue to the upside. So what we're looking for now is for price to come and test these areas. I want the price to come and test this area and then shoot up. So look for buys when the price comes back to this zone, with our stop be just below the zone in the targets. I think which is a good trade. If you're gonna catch it, we're gonna make some gonna bank some money here. Let's look for a small correction from here, because you see already the market is giving us the multi is shutting down. See this bearish engulfing. So what we want to see, we want to see the market come down to these areas and then show us a rejection. Maybe give us a candle like this one, a hammer like this one in this area, then we will know what we want to buy up. What you don't want to see, but we don't want to see price shoot all back in and then test, because that will give us a head and shoulder. See, this will be the left shoulder, head, and then the right shoulder, which will be a test of this zone, then shut down. So that is what we don't want to see. We would like to see the market come down to test the zone in a corrective manner and then shoot up on this chart, and then that is when we are going to execute our buys, our short-term buys, from here to the top of the structure. And then when the markets get to the top of the structure, we're very happy to see it come get there in a corrective manner. Okay, remove you. We want to see the market get to these areas in a corrective manner, in a structural form, and then shoot down, give us a 15 minutes flat, then shoot all the way down. So when this happens, we know we're gonna look for a pattern within a pattern in this area. When this happens, we know the trade is highly probable to happen. So when this happens, we'll be looking for market to come and give us a test on our bottom trend line. You saw our H4 structure, how it looked like. Let's say we had a rising wedge. This is our rising wedge. We want the market to go up here, give us a touch on the top trend line, and then shoot down. So that is basically what you are looking for here. We want the market to come and test this zone, shoot up, and then from here you want us to give us a rejection, maybe in a corrective manner or in a structural form, before we can execute ourselves. So this is the area where we're going to be looking for the cells in this area, around this zone, for cells to give us a test, give us a touch on the supporting trend line. Okay, what just happened? We want to take a cells in this area to give us a touch on the supporting trend line. But short term, we're going to be executing some buys. What's wrong with my mouse? So on short term, we're going to be executing some buys around this area when the price comes back to test the zone with our stop below the zone, which is a 1:4, a good risk to reward. So don't miss out on this one. This one is I'm looking to take it probably tomorrow when it happens, when the market opens. I'm gonna be looking at it. I'm gonna execute on this one. So make sure you don't execute below the zone. You don't place your buys below the zone. When the market tests above the zone, then that is when you know it's going to buy. But if you see this thing resembles some sort of a double top, and the double top formations are different, we're gonna talk about it. So the double top, which is high and a low, or there's a top with equal high and a low, and then the double top like this. So these are different variations. So I won't be surprised if the market just impulses back into the zone. I will know what's okay. This is just a double top. So we wanna buy when the market just test above and then shoot up. Not when the market just does this, because it's gonna be change of a trend. So keep that in mind. Keep that in mind. So let's move on. We're gonna look at euro, pound. We're gonna look at euro pound, starting from a daily time frame. Let's have a few pairs that I'm looking at. See on a week, let me just open the weekly chart. You see on a weekly chart we have a strong support level around here, a very strong support level around here, which happened very long ago. So the price is fading to break this area, and now we have come to test this area again. So now we have come to test this area again. We're gonna be looking for buys in here. We are buying, guys. We are buying from here up. We are buying from here up. So let's get down to the analysis. On a daily time frame, this is what we have. We know what we have is we have a structure. Okay, let me remove this one. Let me remove this. At the back of your head, you must know what we are on a major support level, So this is my daily chart. Just gonna put my horizontal array there, just to mark my low. I know this is a support. I want the dead touch there. One, miss this point. I'll take this one in a second. Then it should go up. Let's go to H4. So H4 is quite this one. I hate big structures like this one. So big. Okay, but we know, guys, what we are looking for buys, and the price is approaching the major support level. So I'm just gonna find my trend lines, and I take this one as my highest point. Mark this high as my target from here to there. This is what I'm just gonna focus on for now, because I'm in the smaller time frame. I'm in this one already. Okay, so this is my H1, and my H1 looks like this. So we know what this is a major support level. This one. This is a major support level, and the price is approaching the major support level in a very corrective manner. If you look at this move up, this is a big impulse, and now it is correcting down to the support level. What do you expect? We have an impulse, then start correcting down, and you know from there you need another impulse. So that is it. That is what you need to do. So we know what we're looking for, an impulse. So I'm just gonna specify my structure here. A very good one. 1, 2, 3, and then another one from here. Just put it here. That's a very clean one. I want to see how the market is going to react when it gets to these areas. Just gonna refine it like this. So the market has given us 1, 2, 3. If I take these as touches, we want the market to come to these areas. So when the market opens tomorrow, I'll just be looking at how the market gets to these areas. What I'd like to see is the market getting there in a very corrective manner. Maybe give us a head and shoulder, then shoot up. So I will be looking at it very close to execute on this buy. Or what I'd like to see, I won't be taking a risk entry. The risk entries have blown my accounts several times, so I won't be doing it. I will look for a first impulse up, and then a 15 minutes bear flag, and then a 15 minutes bull flag, and that is when I'm gonna get involved in this trade. Just when the targeting this area as my first take profit. Hit my stop just below the pair flag that's gonna form there. I want to see the market get here very corrective. Even if it gets here product impulsive, I will what I'll be looking for. If it gets impulsive, I'll look for first move up and then give me that small flag on 15 minutes time frame or H1, then shoot up. So that's basically what I'll be looking for, and then that is where I'm gonna get involved on the first flag, take it to the upside. So that's basically what I'm looking for. So marking this area is my first take profit. This area, you see it made a double top here and then shot down. So it's very significant. It's a very significant area I've been looking for to take this trade. And then this one is my final take profit. So overall, it's a very good risk to reward ratio, 1:15. You don't have to force trade. You don't have to force it like taking a risk entry here, because the stop is gonna be big. Look at this week. If you take a trade here and then your stop is gonna be must be just below the zone. Or maybe if we have a long candle here, more like this one, but a short wick, then you can put a stop up below that hand. But I don't want to take a risk entry here, so I'm looking for a reduced risk entry on a first continuation correction. Take it here. This is my first target, which is good. The 1:5 roughly, and this one is my final target, 1:11. So it looks good. So don't miss out on this buys. Don't miss out on this buys, guys. It's looking very positive. So just gonna be looking at how the market gets to these areas, gets to the bottom of the structure. I'm just gonna be looking at how the market gives me the touch in these areas, or it comes to this support area, and I'm gonna execute my buys at reduced risk. So I'm gonna move forward to pound Swiss. Pound Swiss, this one. Oh, this one looks nasty. Okay, but I start from a daily time frame. I'll show you what I'm looking for. See how these points just line up very nicely. Markets bounced here, bounced here, bounced here, and then it also bounced here, and now it's here. It should bounce. If you see, it should bounce. If you look at this price action, you see this rejections here, and this thing is more like a double top. If you look at this is a double top. So the price just went up, went down, came to test this area. So it should complete the M pattern. And now who's going on? It should complete the M pattern. You see, it should come down to these areas. So this will be our target. We'll be targeting these areas. Boom, shut down, double top, and then now it should go down. See these big rejections here. The market is going down, and it's lining perfectly with these touches. 1, 2, 3, 4. The market should go down. So this is what's gonna be. It's just building the pile of evidence to take the sales here. So I'm gonna dive to my H4. So this is my 4-hour time frame. Okay, that's it. That is my 4-hour. Let me reset the chart. You can place a trend line from here to here. good one, isn't it? 1, 2, it was anticipating a touch here. We don't have to get there. You see, the thing with the trend line, it says there is a high probability that we will get a dead touch here from this resisting trend line. It's a high probability that we can get another touch there, but you don't have to. The market must, it's not a must which the market must give us a touch there. So there's a high probability that we're going to get a touch there, but it is possible that we can get a double top, of which we have gotten the double top, you see. And so I'm going to remove this one because now it's a bit of a distraction. So it is possible that you can get a dead touch there, but not always the case. Doesn't always happen. The market doesn't have to give us that touch. In this case, we've got a double top, so that is why we have to think in probabilities as a trader. If you read the trading news by Mark Douglas, encourages traders to think in probabilities. And then if you follow Mark Hutchinson, he talked about this very often. Also, you have to think in probabilities. We have got a double top here, and then now the price went down. Gave us price short down, gave us a correction. We're looking to take continuation to the downside. That's it. That is it, guys. So what you're gonna do in order to take this off, because you're not just going to take a sell and nomi ganjani. So I think this is a left shoulder, this is a head, and this is a right shoulder. So we have a double top, we have a head and shoulder, then we have a double top, we have a head and shoulder, and then we have our first impulse on H4 time frame. We have an impulse, correction, looking for another impulse to give us a touch here. So we will be lucky if we are lucky enough, the market might continue and break this trend line, come to this area, give us a 90% room. So that's what I'm looking for. That's what I'm looking for. Let me go to my H1. So my H1 looks like this. You already have this impulse, the correction. So what I'm gonna do to execute this trade, someone else would event here. So the trend line, why is it in the air? Yeah. So what I'm gonna be looking for to execute this trade, see, someone else might take a trend line from here all the way. See how it lines up perfectly with these touches. How it lines up perfectly here, here, and here. So this is already a break, retest. This is I think this is the first impulse. But when the market opens tomorrow, I don't want to execute the trade just at 12 o'clock when the market opens. No, that's not my style. So I just want to look for another place that the market might test. From here, see, this one is perfect. So this is what if someone would say, why don't I place my trend line here? Just want to accommodate the most touches. See how the markets came to these areas, touched here, went up, touched here, and then trickled, and then come when it got here, it bounced, and now the thing is passing down. So that's basically what I'm looking for. And this one, and this is a pattern again. Oh damn, son, where did you find this? I need ghost. Okay, now we have a pattern within a pattern. So we identified our head and shoulder here. You remember, I said this is the head, this is the right shoulder, this is the left shoulder, this is our head. What the fuck, man? This is our head, and this is our right shoulder. So the market should break the neckline. The neckline, where is the neckline? I'm just gonna place it here. Where is the neckline? So basically in the markets, I'm looking for the market to come down here, test, bounce before shoot down. You see, that's all I'm looking for. So I'm just gonna delete this. So that is all, guys. That's basically it. That is what I'll be looking for. But then again, if the market bounces from here up, I won't be shocked because I'm not involved in the trade. The market might go to give us another touch. So that is why it is important to have different scenarios. But I will just look at how the market reacts. If it rejects in these areas, then I will take a buy, which will be a good one. A short one, a short-term one, up to these areas. Or maybe just this area. The 1 is 2, 3, nice one. Which I'll take it when it happens, but I want to see some huge rejections so that I will be convinced. I want candles like this. I want bullish engulfing candles. Yeah, so that I can take this buy, because this will also give me like something more like a double bottom here and then shoot up. But I'm kind of convinced that the market will break below. If you look at this very big H1 candle and the head and shoulder, the double top, I'm convinced that the market will break, give us a little pullback, and then execute ourselves. If the market breaks, give us a pullback, and then we execute ourselves. So there, stop, just a small stop, and then take it in. And then our target over here. So another take profit level. So if this one happens, if it breaks below the trend line, we can target this area and also target these areas too. So this looks easy when I place my position tool like this, thinking I'm gonna hold this trade up until the not a child's play when you hold the trade. So it needs you need to minus emotion out of the out of trading arena in order to be able to hold trades like this, because what might happen if price to break, take you, then have a big correction just like this one. You see, if you was triggered in maybe around here when that bearish thing happened, see, it will be hard to hold this correction. It will be very hard to hold this correction, just like the one that I'm holding right now. Let me show you USD/JPY. I'm currently in this trade that I took last week. I think if it's paying very well, it's gonna be paying very well. I took when this candlestick happened, this big bullish candlestick, bearish candlestick happened, and then typed to H15 minutes chart, and then I took my stop. My stop was initially above this low. It was a big stop because I thought maybe we're gonna have a very impulsive move, but it didn't happen like that. Just kept struggling. I was on negative almost the whole day, and then just late around about 6-7 at night, then the market just shot down very impulsively, and then I moved to break even. When you move to break even, you eliminate the emotions out of the trading arena. So I moved to break even, and then I watched it happen. So the following day it kept retesting. I even thought this was a head and shoulder. It looked convincing like head and shoulder. I wanted to close it, but I said, damn, I'm not gonna lose anything if it takes me out, because I have already moved to break even. just keep trickling. Then I evolved my lokunja, my pattern. Unfortunately, I didn't take this cell here that I wanted to take. I missed it. So the price shot down, and now you are here. Now we're here. So I was checked in around that area, moved to break even. So now we are in this area. My stop loss right now currently is here. I'm moving as the market moves. So I'm looking for the completion of this pattern for the 9% rule. Because I forecasted this trade for like 2 weeks. I waited for it for like 2 weeks. It was here when I started looking at it. There's a bigger pattern. This is just a pattern within a bigger pattern in the structure. So I'm not gonna talk about it. So I'm looking for a continuation of this move, for completion of the structure. So on 15 minutes, I think it looks interesting there. No. 15 minutes time frame. That is where I'm gonna refine my structure. So get an entry. You see where the break, the test. This test gave us a double top, which was a very good one. If it happened, I was gonna take it, but I missed it, and I'm happy I missed it because this trade caused me a lot of emotions. So I don't want to overtrade. That is why I didn't take much trades last week, because I was still holding this one. So I think it's very good when I put the trend line. Like, it looks very promising. If I put the trend line here, you see impulse, double top, and then trickled down. This is a very corrective nature. So I thought maybe when it gets to this double bottom here, it was gonna shoot up, but it didn't, just impulse down. So when the market happens, I'm just gonna look for maybe something like a candle with a huge wick, and then a body which tests this lukunyana before I saw. So that's basically what I'm gonna be looking for. So that's why I'm gonna place more sell around these areas. I stop. So that is why it is important to utilize the smaller time frames, because they give you the advantage of the very small stop losses. So this is gonna be my scaling position all the way to that area. So I'm looking forward to it. So you see this stop loss, how small this stop loss is. So that's what I'm looking for. That's what I'm looking to take tomorrow when the market opens. My scaling position. So when I take this one, I'm just gonna move my stop loss to the stop loss. To the level of this one. Yeah, that's how I'm gonna manage it. So if this one starts impulsing, so I'm gonna move the stop loss of this position, and this one together, all the way to here. So don't miss out, guys. That's what I'm looking for this week. Those are the pairs that I'm looking to trade. So if you're new to this channel, please like and subscribe, guys. Invite other traders. Join my Telegram. I have a Telegram group that I'm currently pushing. I have traders there who are serious about trading. We share our markets analysis, we share our trade ideas, and everything that's gonna provide us value, so that you can make money. So please, I urge you guys to like and subscribe. See you on the other side.